Hi, everyone. It was a very decisive negative session for the stock market today, and we are reversing right at basically resistance points that I figured we would reverse at. It's starting to happen. The only thing is that we can't be too cocksure here that the market wants to split wide open. I still think that we're going to chop and slop here. I think we will start trending lower, but that we could easily find support at the 200-day moving average on the Nasdaq, rally back to the 50-day moving average, and then see what the market wants to do. But today was pretty clear, and I mean stocks like Twitter. Look at Twitter just get destroyed today, 18% on huge volume. Always could be a washout. When you also look at data with the huge volume surge, you'd think it's a washout. However, the week closes without the big intraday reversals, leaves a lot to the imagination. We look at stocks like Tesla failing right at the 50-day moving average, Solar City breaking down right below the 50-day moving average. We had a few earnings winners tonight, but overall, still, the market setup is just questionable. Doesn't look good. Stocks like Priceline and Google look like that they want to roll over. But the most severe or noticeable data point is the Russell 2000. The Russell 2000 has tested the 200-day moving average in the past month. If you want to count this day on the 11th, 1, 2, 3 times there, 4, 5, 6, 7 times, and today on the 8th retest of the 200-day moving average in the past month, prices finally closed below the line. And not only do they close below the line, but the Russell 2000 is closing at its low of day. Very, very negative session. So I think that the market's ready to go ahead and trend down for a little bit. Therefore, due to all of this, the S&P 500 failing to be able to hit new highs after all those up sessions the past month, after trending so slowly higher. The S&P 500 could not hit new all-time highs. The Dow Jones Industrial Average could not either. They're reversing off those levels, but once again, volume is low, so I don't want to get too crazy here. That way, and we'll add 2% to our SPXU hedge. We'll add 2% to the FAZ hedge. We'll add 2% to the SOX S hedge. We'll add 2% to the SRTY hedge. And we'll add 2% to the SQQQQ hedge. Had volume been huge today? I'd say sure, 5%. I mean, the risk-reward ratio on these setups is immaculate. And I know that I have a couple of guys in my chat room that are looking forward to buying the bargains when the market sells off. And I admit, I will be too, but I just don't think that, it's going to be anytime soon. I mean, we do have value stocks out there, but the first quarter numbers are looking very, very weak, and some of the data points just look extremely weak. And with rates already low and QE not working that well anymore, where do you think the market's going to go? I don't know how the hell we can just rally on no volume, but that's what a lot of people think can happen here. And also, I got to admit, in 2000, I saw a lot of people get involved in the stock market that shouldn't have been. It was just like the levels in 2000. We are here again. I monitor user groups on Facebook, StockTwits, chat rooms of penny stock traders, and I tell you what, the amount of new traders coming into this market that just want hot picks, that have no idea of investing basics 101. I mean, hell, a lot of them don't even know what long or short means from what I'm saying. They just want to pick and they're playing it. This has got 2000, 2007 written all over it. So I don't know if we break down now, but we've got every sucker that can possibly be interested in the market interested right now. So it's just a matter of time. There's no new longs, no new shorts with all that. Garmin was looking good for a potential long, but if we look at a long-term chart of Garmin, you can see that this is a very short stroke base compared to the already big pattern. And my biggest problem is that while I like this chart, I noticed that the intraday open was 58.74 on the 30th. It couldn't get above 58.74 on the second, got up to 68.69, and then today it closed at 58.36 and got up to 58.73. Once again, not getting above 58.74. So until we see it close above 58.74, I'm really not going to be interested in Garmin. But it is a nice stock, so this is one of the best charts out there. But still, they like to kill breakouts in this market, so I don't really recommend, buying breakouts. They do like to reverse. And I mean, besides Twitter, look at YY, look at ZU, look at Yelp, look at Trip, look at Facebook, and we already brought Tesla. I mean, it just doesn't look healthy overall. So in that regards, got to be careful here. PH is going to be a 25% sell, closing below the 20-day moving average and low day of the signal date. Still holding above my final cut loss levels and the 50-day moving average, so I still have half of the original position on. It's a safety defensive stock, so I'm not too worried about it. And then TPC has failed, and if you're even thinking about holding it for one more day to see if it works here at 50-day moving average, don't get out. Earnings are after the closing bell tomorrow, so this trade has failed, and it's time to get out in case this stock wants to gap down, because I know that real estate stocks, while they are still trending higher, I'm seeing a lot of breakdowns out there in some REITs, so that's never good. So PH 25% sell, TPC full sell, 2% hedges added to all 5 of our current hedges. Would have been 5% if we had some strong volume, but we didn't. And there was nothing to do intraday day trading wise, so I did not see anything that I liked. We will pick it up again tomorrow. Thank you very much. Aloha.